Every once in a while, I talk to a home buyer and they firmly believe things to be true that are just myths. And it ends up costing them money. Hi, I'm your mortgage guy, Dave Steinberg. This is your Summit Minute. Let's just go right into it. Here are the top 10 myths that I encounter in my practice and that's costing home buyers money right now. Starting with myth number one, get it all the time. Working with a home buyer, I've heard that I shouldn't let anyone run my credit until I'm ready to, until I've found the house. Well, first of all, we can't do an adequate job for you without running your credit. We can run what's called a soft pull sometimes that enables us to get a look at your credit. And we do that primarily if you have not yet identified a home. But running a credit early saves you from problems like huge number of files out there have bad information. When you look at the credit report, say, oh, that's not my account. And we can get that corrected. Sometimes we can get your credit score pulled up just by taking a few minutes. Myth number two, if I can get approved, I can afford it. Well, getting approved just means that you pass the hurdle, but it doesn't mean you can really afford it. For example, you may be more frugal than most people, or you may not be. You may be a spender. You may be buying a home that has very high carrying costs. For example, does it have a big lawn that you need to hire a gardener to take care of? Are the heating costs going to be much higher than you anticipated? What about your personal needs? Are you supporting a family? Do you have kids who have special needs or schooling or whatever your situation? You may not be the same as the average person. Myth number three, this is one that kills me. You need 20% down. That's what your grandfather did. That's what your father did. You have to save enough money for the down payment. Well, here goes. A lot of times people get stuck on a treadmill. They don't have quite enough. Say, wait a year. The price goes up. And now they still don't have enough. Say, wait another year, and the price goes up again. I've seen people be priced out of the market because the home that they were looking at 2 years ago might have cost 25% less than it is now. Myth number four, I have enough saved for the down payment. Great. But have you considered closing costs? Closing costs, depending on the market, can be very significant. You have to budget for the down payment, the closing costs, and here's the kicker. You need to have enough money so you have a little bit of a nest egg after you close. Otherwise, anything that happens, you're in trouble. Myth number five, I can do it myself. I don't need a realtor, I can do it myself. The answer is you probably can do a lot of things yourself, but hiring the right team of professionals is going to make a huge difference. And so get the best realtor in town to help you find that house. Work with a great attorney. Work with a great insurance broker. Get the team that's going to make sure that you are protected and covered and making the right decisions. Myth number six, there's a perfect home out there. And there probably is. But how long will it take you to find it? What I always like to say is the perfect is the enemy of the good. If you find a home that meets your needs, that you can live in, that may be the best you're going to do right now. Myth number seven, pre-qualification is the same as pre-approval. I recently was on the phone with a realtor. She had gotten a pre-approval for a home that she was listing, and she did not know anything about the lender that pre-approved her, and she was not ready to take that offer. She ended up going with a different offer. Similarly, there's a huge difference between pre-approval and pre-qualification. When I do a pre-approval, we're reviewing everything. We're looking at your credit. We're looking at your income. We're looking at your assets to make sure that you can truly get approved. And if you can get approved, we're communicating that out. Myth number eight, and this is another legacy myth, never pay over asking price. Your mom and dad, when they bought their house, they paid asking price. Today, it just doesn't cut it. A lot of people are pricing homes strategically so that when they list a home, they're listing it, let's say, for 5% below what they really expect to sell it for, and then they get a bidding war. So they may list for, let's say, 500, thinking that they'll get at least 525, and in fact, they may get offers as high as 550. So if you're going to restrict yourself to bidding the asking price, you're going to lose a lot of offers along the way. Myth number 9, who needs an inspection? I walked around the house, I didn't see anything. I don't need an inspection. Famous last words. That's where the term money pit comes into. There are homes that just, if you don't see the signs, you miss the signs, and all of a sudden, now you have thousands and thousands of dollars worth of repairs. And finally, there are a lot of people out there who believe, I bank with the bank on the corner, banks are going to take care of me. Well, here's the truth. This is what I do. I've been doing it for 37 years. I do only mortgages. I help people get the best mortgages, and I understand both what's out there on the market and what you need. We have products that most banks can't do because they're limited to this limited offers that the banks have. The other thing is, on average, people who work with a mortgage broker like myself save over $10,000 relative to those who work with a bank. So I suggest that if you want to go to the bank, go to the bank, but give us a call as well. I'm your mortgage guy, Dave Steinberg, and I'm here to help.